Well, hello and welcome to another episode of the Legal Gym Podcast. Thank you so much for joining me today. Today, we're going to be talking about everybody's favorite topic, and that is how to get paid. And not just how to get paid in any way, how to get paid if you recently set up your own LLC. Now, for the show notes for today's episode, which are going to include all of the links and resources for everything that I'm going to be talking about today, make sure you head on over to hawthornelaw.net/32. That's hawthornelaw.net/32. All right, you ready now? Let's go ahead and dive on in. Before we get into the amazing content for today's episode, I wanted to let you know about a new training that I'm working on. I'm going to be teaching my 4R framework to get your trademarks registered quickly and easily. In addition, I'll be sharing the top 3 mistakes that I see online entrepreneurs make that can sabotage their brand and even force them into bankruptcy. So if you want to sleep better at night knowing that your brand is protected, you definitely don't want to miss this training. Just head on over to hawthornelaw.net/trademark to get notified when the training is live. One more time, that's hawthornelaw.net/trademark. And don't forget, everyone who attends this training is going to get a free gift. So if you're an entrepreneur who is building a brand online, this is one training you don't want to miss. One more time, head on over to hawthornelaw.net/trademark to get signed up for the notification list today. Now, when I first started it wasn't even an online business. It was my law firm. I started it back in 2005. And up until that point, I was around 30 years old. I've been receiving a paycheck from an employer for my entire life. And as many of you can certainly probably relate, when you receive that paycheck, they take out taxes, they take out benefits, they take out maybe retirement contributions. And so they take care of everything. And at the end of the year, you get a little W-2 that says how much you made for the year, and you file your taxes, and it's that easy. Now, when you first start an online business, or any business for that matter, it's a little tricky because you've got to figure out how to do all that. But instead of doing it as the employee, you're doing it as the employer. So can you just write yourself a check? Can you pay your bills out of your business account? Do you need a payroll service? And even more important than that, you might be wondering, well, how much do I pay myself? And how frequently do I pay myself? What is the appropriate amount? How do I minimize my tax liabilities? Am I doing this correctly? I'm guessing that if you're still with me, you're still listening today, maybe you can relate to some of these questions. And honestly, business wasn't supposed to be this difficult, was it? I mean, I used to struggle with all these issues and questions, and then I figured out that paying yourself isn't actually as difficult as everybody makes it out to see. I mean, I still remember the days when I honestly had no idea. I had this money coming to my business account. I didn't know. I was afraid to take money out. I was afraid to pay myself a check. I didn't know what the process was. But I'm here to tell you it's not that hard if you do it the right way. And once you figure out what that right way is, and once you figure out the system, then you never have to worry about paying yourself ever again, because it's going to be seamless and easy and systematized, and that's going to be it. So today what I'm going to do is I'm going to share with you my 3-step approach to taking a salary as a business owner so that you never have to worry about how or when or how much to pay yourself ever again. And this 3-step approach corresponds to the 3 different levels that I see businesses come in at. And basically you've got Level 1, which is the startup business. This is a business that's just getting started, has little to no revenue or profit. And then Level 2 is a business that is starting to receive some profit, maybe up to $50,000 in net profit per year, which is approximately $4,000 per month if you're good at math. And then finally, you have Level 3, which is businesses that are exceeding $50,000 per year in profit. So let's take these one at a time and talk about how you should approach paying yourself depending on which business you are. So if you're one of these first businesses, which is a lot of people that I see, you're just getting started, you're at Level 1, you've got little to no revenue or profit, but maybe you've got a little bit, but you're still maybe losing money because, frankly, you're spending more money on the business than you're making. And so what you're finding is that you are putting most of your money into the business rather than taking anything out of the business. And hopefully you're not in this stage very long, because if you are, you're probably not going to last in business. But a lot of people do go through this process for at least the first several months of business before they start getting some clients and getting some sales and and getting some traction so that their business is starting to pay them versus them paying the business. But the nice thing about online business is that it really costs virtually nothing to start an online business. So at this point, what you're really doing is just putting sweat equity into the business at this point. And hopefully you have another job or even some savings in the bank so that you can tide yourself over until you get to the point where your business is actually turning a bit of a profit and you're at level 2. So let's talk about level 2. Level 2 is where you're starting to turn a bit of a profit in your business. And this could be up to $50,000 per year in net profit. And this can be anywhere in between. So you're making like virtually nothing up to $50,000 per year net profit. Now, at this point, you likely do not need to elect an S corporation tax status because the cost just doesn't justify the financial benefit. You're going to need to hire an accountant if you want to do an S corporation. You're going to have to pay extra payroll fees. You're going to have to do extra tax returns. You're going to have to hire a payroll service. And you're looking at total costs of around $2,000 to $3,000 per year. And frankly, that's about as much as you would save if you were to elect an S corporation. So it probably just doesn't make sense financially to set up an S corporation at this point. So what should you do instead? Well, let's assume, and we'll use a little example here, that your total revenue is about $71,500 per year. I realize that's a bit exact for an approximation. However, that's what works into my little calculator, so that's what we're going to go with. That leaves you with $21,500 in expenses, which is roughly 1/3, about 35%. Now, what I want you to do is multiply that gross revenue by 15%, and that's going to come up with about $11,000 per year that you can set aside for taxes. And then if you multiply it by 5%, that's going to give you another $5,500 per year that you can use for your profit account. And then you can pay yourself the remainder, which is about $3,000 a month as a salary. So if you have a business that's just starting out and you're making somewhere in the neighborhood of about $6,000 per month in revenue, then you may be at this point where we're right on the cusp of, electing an S corporation. But the numbers that I've come here, you might be wondering, well, how did you come up with these numbers, Jim? Well, actually, these are taken right from the Profit First method by Mike Michalowicz, which is something that I follow. I highly recommend that you follow it. And so what you're looking at there is you're going to do, your total revenue is $71,500. We're assuming about 30% of that revenue is going to go to your expenses, which is roughly $21,500. And then we're also assuming 15% is going to be going to taxes, 5% is going to go to profit. And so you should be at 50% left over, and that's going to be roughly $3,000 a month for salary, or about $36,000 per year. Now, if your revenue number is lower or higher, you may need to adjust these numbers accordingly. And I do have a really helpful calculator. I'll leave it in the show notes page for today's episode. There'll be a link to that where you can download my Profit First calculator that you can use to figure out exactly how much you should be transferring to each of these accounts at the end of each month to make sure that you're paying yourself the right amount. And that's what you do then. At the end of the month, you run the appropriate calculations. You write yourself a check from your operating account to pay your salary. You put some money into your tax account to pay for that when you run your payroll at the end of the year, or if you're making quarterly estimated taxes, then you use that to make your quarterly estimated taxes. And that's what you do. So hopefully you're with me so far, and this is making some sense to you. I realize, again, that this is not easy stuff, especially when you start talking about numbers like this, but it doesn't have to be hard either. So again, just let me run through those numbers one more time so you understand what I'm saying. If you're up to around $50,000 in net profit per year, which is revenue minus expenses equals profit, then you should be setting aside roughly 30% each month for your expenses. You should be setting aside 5% for your taxes, 5% for your profit, 15% for your taxes, and the remainder, which should be about 50%, for your owner's income. And if your numbers are out of whack, if you find that your expenses are actually 40% and your owner's pay is 55%, so you don't have enough money left over for profit or taxes at the end of the month, then something's wrong. You need to either cut your expenses or cut your owner's pay to make room to make sure that you have that money for the profit account and for the tax account. And I'll tell you, that's so important, because once you start setting aside money for profit each month, it just gives you that bit of a cushion that that if something goes drastically wrong in your business, you can tap into that money in the profit account if you absolutely have to. I don't recommend it, but you can. And you also know that you've got the money there so that at the end of the year, if you get a big tax bill, which happens to a lot of entrepreneurs, you've got the money available to pay that. So it's really important that you be using all 4 of these accounts to set aside money each month so that you have the money to pay for your taxes and any emergencies or surprises that might come up in your life. Now, the other thing that I do, and this is somewhat ninja, is I will take that 50% that I'm paying myself as my salary, and I will take 10% of that and also set it aside into an investment account. And I do that so that I'm to maintain that habit of continuing to pay yourself first every single month. So you're building that nest egg. And then what I typically do is at the end of the year, I may transfer some of that money into a retirement savings plan for myself, an IRA or 401k. And I also have that money available in the event of emergencies. But I try typically not to use that money if at all possible. So that's level 2. Hopefully you're with me so far. Let's move on to level 3. And this is where things get a lot of fun, at least in terms of the legal strategies you can do. At this point, you can start thinking about electing to be taxed as an S corporation. Now, a couple things you need to know about an S corporation. Number one, it is not a legal entity. It is actually a tax status. It's an election you make to be taxed as an S corporation. Now, you can do this if you have an LLC that you own, that you formed, or if you have a corporation that you formed, but you cannot do it if you are a sole proprietorship. And you must do it within 75 days of forming your LLC or by March 15th of the year in which you want to make the election. So we're coming up on the turn of the year here, the turn of the calendar. And so next year, you've got until March 15th to make that S Corp election for your taxes for 2023. Now, I still recommend that you follow the profit first percentages that I discussed above. This is going to make it easy for you to know exactly how much to pay yourself to take advantage. And the reason I say that is because to take advantage of an S corporation, you must pay yourself a reasonable salary. Now, the benefit of an S corporation is that you can pay yourself a salary that's going to be subjected to 15.3% self-employment tax, 15.3% self-employment tax, but the profits you take from the business are not going to be subjected to that 15.3% self-employment tax. If you are just a straight sole proprietor or taxed as a default tax status, then all your income is going to flow through to you. You're not going to pay yourself a salary, and the IRS is just going to tax all your income from your business to you as self-employment income, which means you'll pay 15.3% self-employment tax on all of that income. If you made $100,000 per year in profit from your business and you're just taxed as the default rate, then you're going to pay roughly $15,300 in self-employment taxes per year. But if you make that same $100,000 in profit, but you pay yourself half of that money as a salary, then that's going to cut your self-employment tax bill down by about half. So it's going to go from $15,000 to roughly $7,500. And so you can quickly see why if you're making more than $100,000, $200,000 a year in net profit, then it's really important that you go ahead and elect that S corporation, and you can save yourself literally tens of thousands of dollars in taxes just by making that one election. Now, a lot of people get hung up on this reasonable salary thing. They don't know what that means. So this means you're paying yourself a similar salary as to what you would pay somebody to do the work that you were doing in your business. And in general, a percentage of roughly 30 to 35% of your gross revenue should be considered a reasonable salary. Now, I would advise you to check with your accountant on this to make sure you're doing it correctly. But if your revenue is $100,000 per year, paying yourself a salary of $30,000 to $35,000 is in all likelihood going to be reasonable. Now, obviously, the more your revenue and the larger your team, then the percentage that you're going to pay in terms of overall compensation is actually going to decrease on a percentage basis. So, because more of your expenses or more of your income is going to be going to pay expenses, as well as more is going to be going to that profit number that we talked about. And then also, obviously more of it's going to be going to taxes. Now, once you decide to elect to be taxed as an S corporation, as I said before, you have to pay yourself a salary. Now, you can do this once a week, you can do it once a month, you can do it once a quarter, or even once a year. The cadence of how frequently you're going to pay yourself is up to you. But because most payroll vendors will charge you when you run payroll and your payroll schedule, then once a month or once a quarter might be absolutely fine for what you're doing. And the reason for this is that you can then take advances or distributions where you're still going to write yourself a check from the business, but that's not going to be subjected to tax. It's going to be subjected to tax from the standpoint that at the end of the year, you're going to receive a W-2 showing how much you made in terms of salary, and then you're also going to pay yourself a profit distribution. But you can call those little advances that you make throughout the year when you're not actually paying yourself payroll. You can call those owner's pay, owner's draw advances, things like that, and that's totally fine. Those are profit distributions, and you can do that. This is all going to work out in the wash at the end of the year, because what you're going to do is you're going to decide what a reasonable salary would be for you in line with what you actually made as the business, in line with what you earned as your total revenue for the business. And that payroll that you run at the end of the year is typically going to be an expense payroll. It's going to be a payroll that you're going to run where you're going to say that you made a certain amount of money, but then all that's really going to be deducted is going to be the amount that you're paying in terms of federal and state taxes, Medicare, Social Security, things like that. The amount that you're paying yourself is actually going to be offset by a deduction for payroll advances. So when you run that payroll at the end of the year, you're really just doing it for administrative reasons, for accounting reasons, to show how much you actually earned in terms of salary for the full year. Now, speaking of payroll providers, my preferred vendor for payroll is actually Gusto. You can use my affiliate link at hawthornelaw.net/payroll to sign up for free and earn a Visa gift card when you run your first payroll just in time for the holidays. So I'm going to include a link in the show notes for Gusto. I highly recommend you consider using them as your payroll provider. They are fantastic. I've been using them for a number of years now, and they have never steered me wrong. They're a great company and they do great work. So think about using them. If you are interested in learning more about how to legally claim the rights to your brand, then you're going to want to schedule a free branding strategy call with me. That's right. For a limited time, I'm offering a free strategy call to talk with me about the branding for your online business and how to make sure it is legally protected. So if you'd like to learn more, head on over to hawthornelaw.net/TM-video. Once again, that's hawthornelaw.net/TM-video. On that landing page, we have lots of great information about the process of protecting your brand so that you don't have to worry about getting a cease and desist letter or being forced to rebrand your business at a great expense. Once again, that website is hawthornelaw.net/TM-video, and I look forward to talking with you soon. All right, all you Legal Gym listeners, now that you know more about how to pay yourself, you are ready to implement. Because if there's one thing we love to do over here at the Legal Gym, it's to take massive action. So if you haven't already, make sure you check out the show notes page for today's episode. You can get a rundown of all the links and resources we talked about here today by visiting hawthornelaw.net/32. That's hawthornelaw.net/32. And that's going to be the home base for all of your legal and business tools and resources to help you start, build, and of course, legally protect your online business. Thank you so much for listening today, and I look forward to talking with you in the next episode.